Hi girls, so let's see the next problem in chapter 4. Okay, so I think you have done till illustration 4, so we will start from illustration 6 now. Okay, so let me read the details of the problem for you. Mr. Arshit supplies goods within the state and its value is 6 lakh. The value of goods exported rupees 10 lakh. The value of receipt of goods from other state is 10 lakh. If IGST rate is 18%, SGST and CGST rate is 9% each, calculate the net GST payable. Okay, so as you can see, this problem is again to do with calculation of your input tax credit. Okay, so wherein you have to calculate your input tax credit and also you should arrive at what is the net GST that has to be payable. Okay, so I have resolved it in the notes here. So you can see here, as in I read the details, that Mr. Arshit has supplied goods within the state and its value is rupees 6 lakhs. Okay, so supplies. So first of all, to calculate your output tax payable. So as it is, you know the formula here to calculate your net GST payable. So it's nothing but output tax payable minus input tax credit. Okay, so I've already taught this to you all in the class. You have done a few problems. I guess you are familiar with this. So this problem as well has got the same format to do with. So as it is, I told you, output tax payable less the input tax credit only will give you the net GST payable. Alright, so if you see here, what is the output tax payable on? The output tax is paid on the goods that which is sold. Alright, so whatever is going out, whatever is supplied outside, whatever is sold is what you will calculate your output tax on. Alright, so here it is clearly given in the problem that Mr. Arshit has supplied goods within the state and its value is rupees 6 lakh. That means this 6 lakh will be taken into consideration for calculation of output tax payable for both CGST and SGST. Alright, and in the problem it is given as the GST rate for SGST and CGST is 9%. So to calculate your CGST output tax payable, it is 6 lakhs of supply into 9% of CGST. Okay, and that is equal to 54,000. Similarly, SGST also is 6 lakhs. So 6 lakh is something which is made within the state. So 6 lakhs into 9% again divided by 100, that is going to be 54,000 again. Now if you see IGST, okay, so they have given in the problem that the value of goods exported is 10 lakh. But then we know that 10 lakh of exports is exempted from taxation. So we are not going to consider that 10 lakh for calculation of IGST. Okay, so IGST will be calculated only if it is imports or if it is to do with anything out of the state. Okay, interstate, right? So now we have arrived with what is called as the CGST tax payable, output tax payable, and the SGST. So totaling these two, you will take it to the total column, and that's going to be 1,80,000, which is a total of 54,000 plus 54,000. Okay, so now we have arrived at what is the output tax payable. So according to the calculation, we have to next reduce the input tax credit from this. Okay, so how do you calculate the input tax credit? So in the problem, it is clearly given as the value of receipt of goods. So what is input tax credit calculated on? Input tax credit is calculated on what you have purchased or what you have received. So the value of receipts of goods from other states is 10 lakh. That means this is considered to be IGST. Okay, and the rate of IGST percent is 18%. Okay, so now we have to calculate our input tax credit based on the IGST percentage that which is given, because anyways the receipt of the goods is from another state. Okay, so how much is the receipt of goods? It is worth rupees 10 lakh into the IGST percentage is 18% divided by 100. So that's going to give you 1,80,000. Okay, so this is your total ITC. Okay, that is the input tax credit. Now this 1,80,000 you have to set it off. So how are you going to set it off? How are you going to pay your output tax payable is? So firstly, now you have to consider IGST. Since you don't have anything in IGST to pay, the next consideration will become your CGST. So in CGST you have 54,000 output tax payable. So you have to first set off from this 1,80,000 54,000. So you set off 54,000, then this particular tax becomes nil. You have paid off your CGST, so balance is nil for you. Okay, then after setting off CGST, now next that you can consider will be SGST. So you know the order. First you have to consider IGST, then you have to consider CGST, and then the SGST. So now the next thing to be considered after CGST will be your state. Okay, so SGST. So what is the tax payable in SGST? It is 54,000. So you are going to now set off, after setting off the CGST, now you are going to set off SGST. Okay, so whatever is the remaining amount, okay, 1,80,000 minus 54,000, the balance you're going to set off this. Okay, so from the balance amount, if you're going to reduce 54,000, you are going to arrive at you are going to arrive at again nil balance. So you have set off CGST and SGST fully. So if you go to the total column and you calculate, you have excess. You have excess credit available here. Your total output tax payable is only 1,08,000, but you have a credit of 1,80,000 with you. So you are having excess credit of 72,000 after setting off CGST and SGST. So when you have excess credit, what is that you have to do, girls? You can apply for refund. Okay, you can claim for a refund, wherein this 72,000 can be refunded to you. Or if you don't want refund, you can just leave it back as it is and it can be carried forward. So in future, whatever tax is arriving, you can set off that particular tax. So hope you understood this problem. If you have any doubts, you can always clarify. Thank you.